Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moves that shape our world. And today we're diving into Flagship Acquisition Corporation's latest filing with a situation that's a bit of a mixed bag. A financial situation that needed a little more cash and some shareholder decisions that are pretty interesting. So Flagship Acquisition Corporation is essentially a company that's looking to buy another company, a special purpose acquisition company or SPAC, and they've just put out their report detailing some important events. Let's trace the timeline here back in August of 2024. The company got a loan, a promissory note to be exact, from Whale Management Corporation. This was a big deal as it could go up to $1 million and it didn't even charge any interest. The deadline for this loan was set for December 31 of 2025 or sooner if the company found a business to buy and combine with. Now, fast forward to August 21st of 2025, just a bit before this report came out, they actually changed that loan agreement. They increased the total amount they could borrow from Whale Management Corporation from $1 million up to $1.2 million. So essentially, they needed more money, about $200,000 more, and they got it on pretty good terms, no interest on this loan either, which is quite a perk. This move was carefully done under a specific rule in securities law that allows for these kinds of deals without needing to register them publicly, which is pretty common for SPACs. So which is quite a perk. This move was carefully done under a specific rule in securities law that allows for these kinds of deals without needing to register them publicly, which is pretty common for SPACs. To give you a little background on Flagship, they have a few things traded on the stock market. They have units that are like a package deal with one regular share and one right to buy more shares. They also have just the regular shares and then these separate rights that let you buy a fraction of a share. All of these are traded on the NASDAQ, which is a major stock exchange. Now, here's something interesting. Flagship Acquisition Corporation is calling itself an emerging growth company. This means it's a newer company and it gets to follow slightly different rules for reporting its financial information compared to older, more established companies. They've also chosen not to use an extended period for adopting new accounting rules, which suggests they want to be more up to date with financial reporting standards. Then we get to a really important part of this report, shareholder votes. On August 26th, they held a special meeting for their shareholders. A big chunk of the shares, about 82.46%, were represented at this meeting, meaning enough shareholders were there to actually make decisions. They voted on two main things. The first was a proposal to reduce the monthly fee the company pays to its sponsor, or a related party to keep extending the deadline to find a business to buy. Originally, this fee was about 3 cents per share each month. But now they've approved a change, making it the lower of either $60,000 in total for all shares, or still that 3 cents per share each month. But now they've approved a change, making it the lower of either $60,000 in total for all shares, or still that 3 cents per share. This fee is crucial because it keeps the company alive, allowing it more time to find a suitable business combination. The first payment under this new rule was due by September 20th, and they have until June 2026 to find a deal. And how did the shareholders vote on this fee reduction while they approved it? We see a split here with over 4.2 million votes for the reduction and about 3.1 million votes against it. So while a majority was in favor, there's clearly a significant portion of shareholders who weren't thrilled with this change. The second proposal was about adjourning the meeting if needed. However, since the first proposal, the fee reduction got enough votes, the meeting didn't actually need to be adjourned, and this proposal wasn't put to a vote by the shareholders. Now, this is often where the rubber meets the road for companies like this. In connection with those shareholder votes, a lot of shareholders decided they wanted their money back. Specifically, over 3.8 million ordinary shares were redeemed for cash. This means that these shareholders who had bought into Flagship at its IPO got roughly 10.47 back for each share they owned. This is a pretty significant chunk of the company's capital being returned to investors who perhaps didn't have confidence that the company would find a good deal or who just wanted to cash out. When a SPAC redeems a large number of shares, it directly reduces the amount of money available for the eventual acquisition. This can make it harder for the SPAC to complete a deal because they have less cash to combine with the target company. Finally, they list the exhibits to this report. This is where you find the actual legal documents supporting the information they've shared. Most importantly, Exhibit 10.1 is the actual promissory note they signed on August 21st for that increased loan amount. This is the document that legally binds the company to pay back that money. So what's the story here for Flagship Acquisition Corporation? Well, it looks like they're actively managing their finances, securing additional funds, and dealing with shareholder decisions that impact their ability to merge with another company. The increase in their loan shows they still need capital to operate and find a target. The shareholder redemptions are a common SPAC dynamic, often indicating uncertainty about the company's future success in finding and closing a merger. A high number of redemptions means less cash for the deal, which can make it harder to attract a quality target or complete the transaction. Looking at Flagship Acquisition Corporation, based on this filing, it seems they are in a tricky spot. They secured more debt with that promissory note amendment, which is a short-term fix, but it also means more obligation down the line. The big news, though, are those shareholder redemptions. A lot of investors are cashing out. This suggests a lack of confidence from the market in their ability to find a suitable acquisition. If too many shareholders redeem their shares, the SPAC might not have enough capital left to complete a merger. This puts pressure on the management to either find a very attractive deal quickly or potentially wind down the company. The reduction in the monthly extension fee shows they are trying to manage costs, but the core issue remains finding that business to acquire before their time runs out. The company is essentially racing against the clock, and the market isn't showing a lot of enthusiasm. Alright, that's our breakdown of Flagship Acquisition Corporation's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.